In the world of prop trading, one question keeps coming up in a trader mind, that is futures or CFD. Which challenge I should buy? Which platform is better? Is a CFD platform is a good choice or a future platform is? So in this video, I will cover everything about CFD and future platforms, and we will discuss about a 50k challenge from top tier future platforms and 50k challenge from CFD top tier CFD platforms. So in future platforms like Tradify, Lucid, MyFunded Future, Topstep, these are like dominating the future space. And in CFD, they're like funding pips, FTM or 5%ers, funded trader markets. I'm not taking names on tier wise. These are the random name I have traded with. So if you see, the price range of a 50k funded account of a future platform is 50 to 60 to $100, whereas in CFD platform it's literally tripled, 250 to $290. But there is a plus point for CFD platform, that is you get a double drawdown or more than double drawdown. But in futures platform, the general drawdown is $2k for a 50k account. So if you're paying, let's suppose $100, you are getting access to 2000 drawdown, which is like, if you see, for $100 you're getting a $2000 funded account. Now in this case I am just taking drawdown as the capital. Now if you pay, let's suppose $290, and you're getting a $5000 drawdown, that is very much higher drawdown compared to CFD platform. Now there is one thing about futures, that is you have to just pass one phase account, and in CFD you have to pass two phase account. No, that means you have to make profit twice in CFD platforms, whereas in future platforms you have to make profit only once. Then you're into the funded range. And there is one more down factor for CFD, sorry, future platforms, that is trailing drawdown. So what is trailing drawdown? Simple terms, if we see, let's suppose you made some $500 profit. Now your 50k balance goes to 50,500. Initial your balance, your drawdown was 48,000. This was a drawdown. This was the capital. This is the $500 profit. Now your next day drawdown will goes to 48,500. The more you increase the profit, the more your drawdown will increase. Now this drawdown will stops when you are crossing like 52,000. Then drawdown will stay remain at 50,000. So let's suppose you made 54,000. Still your drawdown is same, 50,000. So you have a 4,000 buffer. This is the how future platform works. Let's suppose you make 55,000, the drawdown will say remain same. This is how drawdown works in future platforms. Whereas in CFD, let's suppose you make 50,000 100, your drawdown will remain the 4,000. Even you get 1,000 more of the profit you made. So let's suppose you made 55,000. Then your drawdown is at level of 45,000. So you see, you get a 10k gap. Your literally your drawdown is doubled. Whereas in CFD, if you made 55,000, your drawdown is just like 50k, 5k. Here it is 10k, here is 5k. So this is the difference between the CFD and future platforms in the terms of drawdown, or you can say capital. CFD platforms are more reliable because you have a bigger gap than a CFD, a future platform. You're getting double drawdown if you make the same profit in CFD platform, whereas in a future form. So this is the one factor, that is drawdown. So if you are someone who trades and want more capital, have low confidence, I will suggest you should go for a CFD platform right now. Currently, I am trading both CFD and future platforms. I have been trading the same pair at the same exact time. So I have been trading SPX 500 in CFD and ES in futures. Like the both movement are same, just the pair name is different and price is little different. So my experience in both CFD and future platforms are literally same. I have been trading with the FTM 25k account, funded account, and lucid 50k challenge. So both are like similar, A to Z, everything is similar. I can't find any simple difference between the execution and everything. Yeah, there is little spreads in CFD performs, but in future perform there is no spread. So in terms of if you say capital or drawdown, I will suggest you, if you are looking for some bigger drawdown and you don't want to face consistency rules, trailing drawdown, then you should go for a CFD performs. Yes, they are little higher in price, but more worth in terms of drawdown. And you can, if you are someone who is like very consistent small wins and like kind of trader, the best choice for you is to get a future perform. Why? Because you have just a one phase account. You just need to make $3,000 in profit to get 50k funded. After that, like if you are funded with 50k futures account, I will suggest to make $3,000, take the 50% profit split, that is 1500. So if you invested $100, you are in a net profit of $1,400, which is a good thing. For your next buffer, it is 1500 drawdown. So your drawdown got decreased, but you get 14x or 15x of your 15x of your capital that you literally put it in the challenge. For that 1500, you again try to make 2k or 3k, then take 50%. So in this way you can literally capitalize a lot. But in CFD Profirm, if you purchase a 50k account, then I will suggest to first recover your account, like recover your fees. Let's suppose you purchase a 50k account. Now you there is a few rule in Profirms, future Profirm, that is you need to trade 5 days and make some $100 to $200 profit each day. But in CFD, there are like minimal rules like 0.5%, 3 days rule, or in some Profirms there are literally zero rule. You can just take one trade and take the payout. So this is one of the biggest green flag for a CFD Profirm, that you can just, let's suppose you risk $500 and make $1,000. So you can request $1,000 and you made $800 in profit after split. So a decent, you recovered your fees, that is 290, and you came in a profit of 600 to 500 to $600 somewhere near. So in this case, I will prefer CFD platforms, like they have more drawdown capability. You can literally have little relaxation of rules. So in some platforms, for future platforms, there are 30 days to pass limit, but in CFD there is no limit. Yes, there are platforms in futures also that provide no time limit. That is very great if you are someone who take like very small risk and don't FOMO or something. So for you, CFD platforms and future platforms, both there are options in future platforms that provide no time limit challenges. You can purchase them. Now there is a consistency rule. So basically, consistency rule is there is a 3k profit in your you need to make in a challenge account. So your daily profit, single day profit, I mean, shouldn't exceed 1500. After that, your account profit will, let's suppose you made 1600 in single day, so you need to make 3200 to pass the account. This is a basic calculation of what consistency rule of 50% is. If you have a 3k profit target, you cannot make 1500 or more. You can make 1500 max, that's it, in a single day. But there is no such rule in CFD platforms. So in terms of, if I can say, drawdown, trailing drawdown, consistency, CFD platforms are far better than future platforms. But there are some CFD platforms that are very shady. They literally play with you guys. So let's suppose you put a market order here. Price come here. This is your SL. This is your TP. Price come here. Tap this. but your order get executed at this level. So this gap is called slippage. Means you get failed, your order failed at a price difference of some points from where you actually placed your order, or where you at the price where you placed your basically buy or sell order. That is the slippage. So some prop firms literally play like that, and they will increase your risk, and maybe it hits like 2% instead of 1%. So if you are someone who trades with very small SL, then CFD profits might play with you. But in future profits there is literally zero slippage, because they are literally taking data from the right from the CME. So there is a plus point for future profits. So if you're kind of trader who takes very small SL, let's suppose this is SL, this is your TP. So might be taking CFD if your firm will fail you here, and your literally risk will double up here. So in that option, you can go for future performs. So for me, if you're looking for future perform, best for day traders and scalpers. And if you're someone who swing trades or day trades, then CFD perform is better, far better than future performs. But if you're someone who is consistent and takes scalps, then future perform is very better for you. There are options like MFFU, Tradify, Lucid, Top Step, Apex. But if you're a swing trader, then CFD performance are better for you. And also you cannot hold overnight your positions in future performs, which is a downgrade for someone who want to like hold for 2 or 3 days. So these are the small points which I think you should take care about if you're trading a future perform or CFD performs. In my take, if you're trading a future performs and finding it difficult, then you should lower your risk in future performs. Should go for a high RR setups or go for consistent wins, but you should risk less, because if you tilt once in future perform, then that account is very hard to recover. But in CFD, if you tilt, there is a chance of recovery. You can recover it because there is no trading drawdown, no limit, and no consistency. So, little easy for CFD traders to trade it. And so this was the basic difference between the future perform and CFD performs. If you're a good trader, then both performs will are easy to trade for you. But if you're a bad trader, then obviously you're gonna burn money in both the CFD perform and CFD futures perform. So nothing big deal in that. Instead of focusing on CFD or futures, you should focus on trading, focus on your data, and like that.